Good morning. I'm Dean Heskin, President and CEO of Swiss American Trading. You are tuned in to our podcast entitled The Secret War on Cash. And we do have a doozy of a war going on when it comes to what's happening with the US dollar, our currency, things that are happening overseas. And to talk more about this, I've got my co-host, Chris Agelastos here. Chris, how are you today?
Doing well, thank you.
Well, you're doing well. That's great to hear, and I'm very glad to hear that myself. What is not doing well is the U.S. dollar. Our first article here: the U.S. dollar plummets as the global market shifts. The Yuan and gold are soaring, so the dollar plummets. Now, I can't say that this headline comes as any bit of a surprise. The dollar has a lot of things working against it right now, not least of which being BRICS. These are our alternative currencies out there. The other thing being, however, the fact that, we've got a lot of debt in this country. There are a lot of questions that are kind of lingering as it pertains to our markets, the stability thereof, and all of which is kind of tied to the US dollar. So now that we have the dollar plummeting, is this a short-term plummet, or you think this is a long-term plummet? And do you have any perspective on, with the Yuan and gold as they are, quote, soaring, is that long-term? Is that short-term? What is going on here, Chris? Is this something that is going to continue?
Yeah, this is a big mess, really, right? And something like that doesn't get cleaned up overnight. Devaluation, we've been talking about it a lot the last year or so. We've all seen it with inflation. We've seen how little our dollar is worth now compared to even just a year or 2 years ago. So we're feeling it. China has obviously been taking advantage of this, and you can't blame them, especially working with Russia to use the yuan to transact. Mostly, I should say what really gave this steam. They've been doing this for a while, but what really picked it up was all the sanctions, the financial sanctions that we put against Russia after the Ukraine invasion. So I don't think any of this is going to change anytime soon. Not for the better. I try to be optimistic, generally, and look at both sides and what are the pros and the cons. But when you look at the dollar right now, there really is just so little positive momentum going for the dollar. Everything is going against us. Really, the only thing that we have is the advantage that we've had over the years for being the reserve currency and being the big boy on the block. And so we still have a good piece of that advantage, but we're losing some of it every day and every month as we move forward here. So, I'm a big believer that, things are you're either moving in a positive direction or you're regressing. And clearly the dollar is regressing here. People are tired of the political, when I say people, other nations are tired of the political repercussions that they're going to suffer when they use the dollar. And that's why they're turning to BRICS and these other organizations to, limit their liability and their reliance on the U.S. dollar. So, all of these things are pushing the dollar down, and obviously, as they even say in here, pushing gold prices up. This is a lot of that momentum we see moving from this now 25. Yeah, and the Yuan. But this is what's going to continue pushing us to that, $3,000 gold mark, which again just means the dollar is suffering.
Yeah, and one of the things that strikes me with when you look at an article like this, and we've seen plenty of it over, the last year alone, the different contexts or ways that there have been other talks of other currencies, gold-backed currencies that are going to step in and replace the dollar. The problem, as I see it, is there's been like these situations where it was almost not that it was really designed this way, but like it kind of tested, like, okay, we've used the dollar forever, and well, let's not do that here, and let's try doing this, and it worked. and they're having success with this. They're having success with replacing the dollar, and that's where I see the problem coming in large part, is that the more they keep kind of pushing against that, they're finding, well, wait a
Hmm.
minute, this isn't nearly as bad as what I thought it was,
Right.
and it's becoming a very very much so the norm, unfortunately, and at a time where, look, this country we've had a debt issue for decades in this country, but as we've talked about a few months ago, I mean, the debt went up 5% in a single month,
Yeah.
and that's something. The point being is, it's become a real problem now.
Yeah.
It's mathematically accelerating quite quickly, and
Hmm.
so you take the fact that there are substitutes coming forward and they're working, and now these countries are like, well, okay, we can get away from using the dollar that we've had to bow to for all these years,
Yeah.
and not be tied to a country that is literally drowning in debt right now, and by drowning I mean quite literally drowning. So
Yep.
that's what's kind of concerning, is I don't think this is something that, I mean, this is going to, I think, gain momentum more
Right.
quickly than anything else.
Yeah.
So you talk about gold, and we'll go ahead. Do you have something else you want to say?
No, I was just going to say that's, you can't reverse that. That's the whole thing about momentum, right? It's pushing you one way, one way or the other, and it's hard to just spin that around. You need a lot of positive force in the other direction to change it, and the dollar just does not have that.
Right, right. Well, so now as we talk about, the what's going on with the dollar, another thing is, in this next article here, investors should go for gold, according to
Yeah.
Goldman, as
Hmm.
now we have federal rate cuts that are looming.
Yep.
Again, it just seems like there is just so many different spokes to this wheel as it pertains to what is happening with, our currency, what is happening with our markets, what's happening with our country. The good news is, go for gold, as Goldman says. That's music to our ears, because you're
Yeah.
talking, there are how many different investment firms, advisors, analysts out there that have been talking about how gold prices, which, as we started this year, prices were not even quite to $2,000 an ounce, or right at 2,000. And as we talk here today, they've been resting pretty comfortably now at the 2,500 level.
Hmm.
And there's a plethora of people out there that are saying we'll be looking at $3,000 plus gold by year's end, and year's end is not that far away. I mean, we are
Right.
kind of in the getting into the final phase here of 2024. So
Hmm.
what in the world is going to stop the prices of gold, Chris, from making these moves?
Yeah, well, that's so we were just talking about momentum, right? The dollar has a bunch of negative momentum going against it. Well, in turn, gold has a lot of positive momentum, and so that's really one of the things that's pushing Goldman here to say this run is far from over. You mentioned the federal rate cuts. We've got a lot of central bank buying because of the instability in the world and the instability with the dollar. And so they're wanting to, hedge their bets. We've seen over or approximately 22% growth in gold year to date, which puts it at the second best performing asset class, right behind crypto. So I can't tell you, seeing these numbers, and obviously we study this stuff. We know what it's been doing. We've been talking about these moves for a while, and now obviously we're seeing it, come to fruition. But I can't tell you how many times I have had people tell me over the years, my broker says don't buy gold. My broker says gold isn't a good investment. I won't make any money with gold. Right? All these negative connotations towards gold, and look, here we are with gold being the second best performing asset class for the year. So, and it comes to no surprise, I guess. I tell people, and I think most of them get it. Look, most brokers and advisors, they're not going to make any money on your money when it's sitting in gold. And it's just the nature of the beast. Your money needs to be invested with their firm in their investments that they manage and siphon off a percentage of fees and expenses in order to make them money.
Which is not a bad thing. I mean, that's the deal. But again, it does stand in the way of, why not own gold? Why not be diversified in gold? Because to your point, and just I wanted to clarify that, because any investment a person makes, there's fees involved with it, et cetera.
Sure.
But it's the ongoing fees, number one, and number two, it does not behoove the advisor no advisor wants to see money leave the room.
Right.
And that's something that is, in the 30 plus years I've been doing this, and I know you've dealt with this as well. It's a very common situation where, a person asks their advisor about gold. They say no. Now, if you recall, I didn't mean to cut you off, Chris, but as gold, started off when I got into this business was roughly 300 an ounce. It's back in 92-ish. It got to as low as 200 and something near the year 2000. And then, in fact, we talked about this a few podcasts ago, where it went from 600 to 1,000, or 1,000 to 1,500. And now, again, we're looking at 2,500. So it's demonstrated its profitability. Understand, however, one of the main motivations, I believe, should be for people to get into gold is to be diversified, have your money in something different, but also to have something physical, something tangible that you can literally put your hands on. And I want to make that distinction or clarification, because another thing you can comment on as well, if you like, even when in the best case of scenario, when several of our prospective customers or even customers have gone to their brokers to talk about gold, the brokers will bring up ETFs or gold mining shares or gold mutual funds. Not to say those are bad things, but they are not. They're distinctly different than owning physical gold.
Right. Well, and that's the thing too, right? So many people talk about these alternative gold investments, we'll call them, whether it's ETFs or gold backs or what have you, mining shares. And again, they all have their place in appropriate, percentages and whatnot. But for most people looking for, stability, safety, security, you just can't get all of that with most of those other investments. And that's where the advantage of having something physical that you possess, or you know where it's stored, you have control over it. That gives you a different level of, I think, peace of mind at night. I feel good. I don't have all my money in gold and silver. I'm in real estate. I'm in the stock market as well. I even play around with cryptocurrency a little bit. There is a place for everything. And I think that's where maybe our company is a little bit different. Because, we tell our clients that we're not telling you to put all your money into physical metal. We're just saying you need to have an appropriate percentage if you're concerned about some of these issues we talk about with the dollar, with the banking system, and so on. But I think a lot of companies, investment companies, if you will, they're typically obviously going to be pushing their product. But I think there are great advisors out there that will tell you, be diversified. And they don't just mean, be diversified within what my company offers, but be diversified everywhere. And I think that's the key.
Sure, 100%. Well, and for those of you tuning in, if you haven't contacted our offices and you want to learn more about gold, how to diversify in gold, what some of the differences are, please do so. Call us at 1-800-289-2646, or you can visit us online at www.swissamerica.com. All one word, swissamerica.com. Well, Chris, thank you for that. And for those of you tuning in, thanks for joining us today. If you're not subscribed to this channel, please do so, as we'd love to talk with you more in the future as we discuss the topic of gold, the topic of the economy, and other things out there that are part of our everyday life in these days, financially speaking. So thanks, Chris. Have a great rest of your day. And for those of you tuning in, can't wait to see you till next time.